The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Well, you made it to Friday. Welcome back to the Financial Exchange. I don't have any great news for you in terms of financial markets. This week has been just a pretty consistent and slow push downward on equity markets, especially tech shares, for reasons that I haven't fully been able to interpret, which is fine. You don't always have to be able to attribute a specific cause to market sell-offs. It's Mike, Marc, and Tucker with you here on a Friday morning where we've got all three major U.S. indices slightly negative for the day, with the NASDAQ leading the way down. We had news out of Iran overnight. We have some news from OpenAI and their planned IPO, according to New York Times. But we're going to kick off with just a recap of where we have gone this week in equity markets, because as I've mentioned, it's been a pretty sustained push downward over the course of the week. So to be clear, not a very strong one. The S&P 500 is down only now 1.9% since the beginning of this week. The NASDAQ composite now down about 4.5%. So I don't think, to be clear, the NASDAQ composite over the last 6 months is still up nearly 9% even with this drop. So it is not erasing year-to-date gains. It is not doing anything like that, but a pretty sustained push downward. And I feel as though the narrative has taken a few different forms throughout this week, which I just found interesting. At the beginning of this week, we were hearing, again, probably mainly just because market commentators were trying to attribute the market sell-off to something. They were attributing it to nervousness around Micron's earnings. So Micron, now the 9th largest S&P 500 company, producing memory chips for just about everything, but right now, especially the AI industry, came out Wednesday night and blew the door off in terms of earnings. They had a very solid quarter. We'll be talking a little bit about what that meant for them and what they are doing here, but really solid quarter from Micron, dispelling those rumors. Micron stock moved up on Thursday. Rest of the tech market moved down on Thursday. Then on Thursday, in part because of Micron's blockbuster earnings and the prices that they're able to charge for chips, you had an announcement from Apple that they are raising prices on their devices. You had Mac as well as iPad prices moving up between 15 and 20%. Apple stock moved down a good 4% on Thursday. That was yesterday, right? Yes, yesterday.
Confirmed.
Thank you, Tucker. And then this morning we have this announcement or acknowledgement from OpenAI that they're considering a delay of their IPO, which I want to spend a little bit more time on because I do find it concerning if you're very bullish on the AI trade that one of the major leaders there is considering a delay of their IPO, and the narrative keeps evolving. But overall, Marc, we are seeing this new nervousness around tech shares, and I just, you can't possibly know, but I wonder if it's just a blip on the radar, as we've seen several times with the AI trade, or if it is some sort of sustained new negativity, because I don't really see much to be negative about when it comes to the fundamentals of this.
Those that were selling at relatively high price to, say, book value, exceptionally growthy tech stocks have been the hardest hit.
Yeah.
So-called value tech stocks, those that comprise some of the bigger names in the Russell 1000 Value Index, which is trouncing growth year to date and over 1 year.
What are some of the biggest names in there?
Micron is the number one holding in the Russell 1000 Value Index. You will also find so-called tech companies, and I'm just speaking very broadly here. It's not a very sophisticated categorization, but Intel is there.
Yeah.
Alphabet is there. Some of these appear in growth as well because of the way these indices are parsed, holdings are parsed or allocated among them. But there are plenty of companies that weren't selling at nosebleed valuations that are benefiting from investment in data. This is, I'm just describing here. There's no real insight. I'm just pointing out that there are companies that were not exceptionally optimistically valued, let's say. I'm not going to pine on whether valuations are right or wrong right now, that are benefiting from the almost indiscriminate frenzy of spending on data centers. They've been rewarded, and thus well-diversified investors that owned a blend strategy or that complemented their growth with value style active or passive management are being rewarded.
So let's dive in then to the Micron earnings, which again they might not have been a catalyst for higher stock prices, but I think they were a signal to the overall market about the pace of demand for memory chips specifically and AI technology generally. So Micron now, like I said, now the ninth largest company in the S&P 500 by market capitalization. And their earnings, I mean, I don't think I agree with this statement, but Daniel O'Regan, who's the managing director for equity trading at Mizuho, called Micron probably a top 3 most important stock in the world when it comes to market influence, putting them in the same camp as NVIDIA and Alphabet, in his opinion.
In a descriptive sense, he's right. I mean, just take it.
Explain what you mean.
Just take it at face value. When it moves, because of its weight now, it's going to move indices, sort of like the point I was making. So. Go ahead.
I think, it is massive now and is now a signifier of the overall AI industry.
Yeah, it's not a very insightful thing.
Right. I think
observation, I should say.
The observation that I was thinking about and making on Monday and Tuesday of this week was that Micron and their earnings are entirely dependent on the demand from the AI industry.
Of course, yeah.
It's not that, Dell and Apple aren't still buying their chips, but that's not the incremental growth that they are seeing. If all of their earnings are based on the incremental demand from the AI industry, like NVIDIA, like TSMC, Micron is going to be one of the last companies that you look at for a leading indication of what is happening with this overall trade, right? I continue. Not that that's terribly insightful, but I just want to make that point over and over again, which is I think oftentimes people are looking at the earnings of companies like NVIDIA and Micron and saying, oh, well, this will really tell us a lot about the direction of the AI trade. And I really don't think so. Right? The direction of the AI trade is going to come from the end users of these products that are trying to tell you whether or not they are actually worth the money they are paying for them. It's going to come from the model creators, the actual users of the AI, because that is the beginning of this supply chain, and that is where the cutting edge stuff is happening. It's not to say that you can't make a boatload of money on companies that create the infrastructure that goes into this. I just don't think it's going to tell you much of a leading indicator of what's going on in the industry.
There's a construction boom, and they make the shovels.
Precisely. Yeah.
Of course, their sales are going to explode.
Full stop. And so it's incredibly impressive what they are doing. I think they're being pretty intelligent in terms of business structure, in terms of how they're trying to structure these deals. They're locking up giant companies with 5+ year contracts to buy these chips, meaning, hey, not only are we going to lock in prices at these current levels for now, but we are basically going to get guarantees from some of the biggest companies in the world that they're going to continue paying these prices and more over the course of the next 5 years. So, a lot of good execution going on from this once sleepy company based in, where was it? It was covered in one of these, like Idaho or something like that. I think it's Boise. Yeah. But nonetheless, I don't think that companies like this are going to tell you much about the direction of where this is all going. They are a beneficiary of the spending that's happening from the very cutting edge companies utilizing and designing these AI models.
Agreed. Yeah.
Let's take a quick break. When we come back, I want to talk a little bit more about this chip memory boom and everything that we are seeing right now, because it's not a new phenomenon that we see a new technology drive a whole bunch of investment into big legacy hardware companies. It is not a first time that some of these companies have been major beneficiaries of the stock market and seen their share prices surge 700%, as we've seen with some of them. I want to talk about the context of this and other companies historically that have seen similar types of things and where ultimately those industries have gone over time. Quick break. That's next here on the Financial Exchange.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck from the Armstrong Advisory Group. Our new guide, Understanding RMDs, explains why required minimum distributions are about more than just withdrawing money from a retirement account. The rules can get complicated fast. An inherited IRA opens up an entirely new set of deadlines with rules to follow, and mistakes can be costly. The IRS can impose a penalty of up to 25% of the amount that should have been distributed. But there also may be opportunities to plan ahead. The guide covers strategies like qualified charitable distributions, reinvesting RMDs, and ways to help manage future tax exposure. To request your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Hundreds of runners have already registered for this year's DAV 5K, and the event is on pace to sell out in record time. So head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Mark, every once in a while when I very hesitantly describe this market as a bubble, I get the side eye. And oftentimes the response that I hear is, what are you talking about? AI is life-changing. And I have to clarify something, which is I believe that AI is world-changing and life-changing and one of those transformational technologies that we only see once every few decades or in a generation. Like I do firmly believe that.
Yeah.
And I was pretty young when the internet was invented, but that one was pretty life-changing too. And I think the key point with all of these is life-changing technologies often do create stock market bubbles. And I know we've talked about this before.
Almost always, yeah.
The internet was an example, but like going further back, I know none of us had a whole lot of experience investing when the radio was invented. But yeah, it led
Those
to
were
a
heady
big
times,
old
so
stop.
let me tell you.
Our
first Marconi.
Even Marc wasn't investing back when the radio was invented.
Yeah, I was named after the Marconi. My parents were so thrilled with it.
Trains, right? Like the automobile, all led to new entrants, massive investment into the new technology because of the certainty that the technology was going to
Mike,
trade.
it's a bunch of BS artists going on using modern terms, going on CNBC and promoting the latest idea in which they're invested, and they hope to pass the bag along to everybody else before things collapse. These guys know. Forgive me. Can I be a little cynical on a Friday? Go. But hopefully, speaking not untruthfully, it's there. We're taking the salesman's word for it on AI. Nobody understands this crap. Nobody understands how to code this stuff except the people doing the coding who have so much stock that they're inherently conflicted, and we have to take their word for it.
Yeah,
including everybody in finance who thinks these guys in private equity, very sophisticated MBAs for the best schools, they don't know jack relative to the people on the inside. We're taking the salesman's word for it. You're breaking the cardinal rule of being a good consumer. We do it every time. Every boom is followed by bust because we take the salesman's word for it. And they are inherently conflicted, and finance is the handmaiden of all this because we're not us, but finance is in the middle of it. They get to wet their beak too, and hopefully, again, pass it along to some sucker before it collapses. As you pointed out, it happens every single time. Don't take the salesman's word for it. It's their job to get you excited and hand your money over.
So back to Micron for a moment.
Sorry.
Don't be. Like I said, ninth largest company in the S&P 500 now. Why are they the ninth largest? Because their stock price is up 845%.
Probably not a value company anymore, by the way. I was okay.
Up 845% over the last 12 months on what is genuinely some of the most impressive earnings that any company has ever realized over the last 12 months. I'd like to point out, though, this is not unprecedented. I'm going to call your attention to a little company called Qualcomm, who was in the news yesterday because their stock yesterday on some new efficiency that they had found in chip markets. Oh, no, they're actually down over the course of the last 5 days, so I'll take that one back. That they had bumped yesterday, but it was apparently not enough to eclipse the downward pressure they've been on for the last week. But Qualcomm, in 1999, saw their stock price boom by more than 1,000%. In fact, I think it was more than 2,000%. It was based on the idea that, hey, they have this market for wireless technology so wrapped up that nobody can compete with them. And for a while, nobody could compete with them.
Think about how that idea propagated. Somebody started the story. Somebody with an incentive and I'm sorry to repeat myself a little bit here, but that was amplified and propagated by a bunch of conflicted people, and who got left holding the bag. I'm saying only it's a good cautionary tale. Don't let it happen to you.
Right. So they were the only game in town, much like Micron is kind of the only game in town right now. Qualcomm still exists today. Their stock is worth $218 billion. They are still a large company today that does some very important stuff and is trying to figure out now this AI push. But the insinuation that this type of demand is just going to last forever and continue to grow year after year has no historical precedent. And I think that's the key cautionary tale with all of this is what happens when prices start to skyrocket on hardware technology is by necessity, firms innovate. They find more efficient ways to use said technology, or new companies that can eat up just a small portion of that profit business because of how profitable it is, enter and find out how to do this stuff as well. And even if it's only 90%, even if they're doing it only 90% as well and efficiently as those hardware companies, they can find a place in this industry, drive prices down, and ultimately we start to see commoditization across the industry. And I think we are frankly nowhere near the beginning of that from what I can tell. The commoditization of the AI trade, I think we've started to see hints here and there that OpenAI might need to compete on price with some other companies. But ultimately, while I believe that's where we are going, which is commoditization of the entire industry, needing to compete on price in order to keep pace with the latest competitor, as well as, remember, competition from China and other places that are trying to develop this simultaneously. For the time being, the message from the very top, and I'm thinking about the end users of artificial intelligence, and I know that Marc, you and I are not, I would not consider ourselves among the power users of AI, but the key message that I continue to hear from all of those are, we don't care the price, spend your time, money, and effort learning how to use these tools because we think it's critical to our business function. And then that seeps all the way down the supply chain. To the model creators, it's get it faster, get it to me now. I don't care the price. I'm willing to pay it. To the data center providers, it's the same story. Get it built. I need the compute power yesterday. I'll pay whatever price you need to, which then funnels down to the chip makers like NVIDIA who need stuff from Micron, who need everything everywhere. And the directive today is I don't care about the price. The only thing that matters is speed. Get it to me as quickly as possible. That story breaks at some point. I don't know when. It could be years from now. But that's how this story breaks to me is ultimately if prices just keep going, directly upwards, then there's a bunch of stuff you can do cheaper with an intern than you can with artificial intelligence, and that starts to break the story. Let's take a quick break. When we come back, full market update on a pressure week for tech stocks next with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. guide.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are mixed and relatively flat, with tech clawing back earlier losses. S&P 500 and NASDAQ are on pace for a losing week, where the NASDAQ has dropped over 4%, while the S&P 500 is off nearly 2% this week. Right now, the Dow is up just over 0.1%. S&P 500 up only 6 points. NASDAQ dipping by 9 points now. Russell 2000 is completely flat. 10-year Treasury yield is down 1 basis point at 4.38%. And oil down over 3.5%, trading at $69 a barrel. According to the New York Times, OpenAI is leaning toward holding off its IPO until next year. The AI company's advisors are pushing its chief executive, Sam Altman, to move slowly after SpaceX stock has been volatile and as the startup grapples with financial challenges. Meanwhile, after its 16% surge yesterday on the heels of its blockbuster earnings, Micron giving back over 2% or bouncing back 2% today. Micron is down by 2% today. Other memory stocks, including SanDisk and Western Digital, pulling back as well. On Semiconductor announced an all-stock deal to acquire Synaptics in a near $7 billion deal. And after sinking 6% yesterday following announcement of price increases to its Macs and iPads, Apple shares are rebounding by 1% today. I'm Tucker Silva, and that is Wall Street Watch.
I want to talk about this OpenAI looming IPO that may now be delayed. But let's start off talking about SpaceX because they brought it up first. So SpaceX debuted a couple weeks ago. IPO price was $135 per share. First trade that took place on Friday late morning was $150 a share. And over the course of the next 3 days, it shot up by Tuesday of the next week to nearly $202 a share. Okay. Since then, it has fallen back down day after day, kind of really since Tuesday, June 16th to where we sit now, which is around $152 a share, right about where it started trading on the first day of the IPO. So again, company gets valued at $1.75 trillion, one of the most highly valued companies the most highly valued company to go public in history. From a valuation perspective, one of the most expensive stocks to go public in history, and remains incredibly expensive. The stock has, shot up to 200 and then come back down. Would anyone in your mind describe that IPO as a failure or concerning?
It depends on what the objective was. If the objective is to, and I'm in a really cynical mood today, forgive me, but if it's just to enrich insiders, and I am going to claim today that the objective of all of these activities we're going to talk about is just to enrich people who in retrospect history will judge harshly. I don't know why I'm in such a cynical mood with respect to these titans, but the evidence is becoming clear. Anyway, so Mike, if the objective was to raise $80 billion, it was a success. If the objective was to inspire a frenzy of buying that held the share price aloft until insiders could sell, it was a failure.
Yeah, but I'm not even sure I would define it as a failure there, right? Like, you're still valuing this thing way more than any of the private funding
rounds. I guess that's my point. When is it enough for these people? They raised capital, put it into the business, innovate, grow the economy. It's never enough. Delaying this IPO. Why is he delaying it? He's not going to get enough.
I think that's what I wanted to hone in on. Is I would not describe SpaceX's IPO as a failure. A concerning
Again,
IPO.
I say it depends on how you're defining it. From their point of view, it's how much wealth can we accumulate.
From my perspective, a SpaceX concerning IPO would be it now trading below its IPO price. It's not even below its first trade. I don't think anyone at SpaceX right now should be concerned about what they're going to be able to sell their shares at when their lockup period ends, because we are still well above the IPO price on this thing. I kind of
unless
look
your
at that.
greed is friggin', but forgive me, but unless your greed is bottomless and you are afraid people are going to find out that the potential revenue of the company is not nearly what Goldman represented it is.
My point here is I don't think that makes sense whatsoever as an excuse for OpenAI to not go public. I think that's garbage. I don't think you can look at SpaceX's IPO and say, oh, this was really concerning, we shouldn't go public. I think there's something else. And I think specifically is the other thing that was mentioned, which is OpenAI is struggling with financial challenges. And so I look at this one piece and say, there's nothing about SpaceX that would concern me about going public. It led to 3x the demand for the IPO. The shares went off perfectly. The stock has stayed within its range since it went public. Nothing there is concerning to me. I'm with you. Some within the inside would like to see it shoot up to 250, no doubt. But nothing there would concern me were I OpenAI. Therefore, the piece that I land on is there is something internal there that leads them to believe that their IPO is not going to go terribly well. And I think it has to do more with the realities at OpenAI than it has anything to do with the market for IPOs.
What will we find out in whenever this was scheduled?
Presumably, I think we're going to find out is that it's a heck of a lot less profitable than their main competitor that wants to go public at the same time. That's my suspicion. Is you have Anthropic, who does the exact same thing that OpenAI does, in a number of key categories, seems to be growing faster and doing better than them, disclosed a little bit about their financial margins in the last few weeks, and now OpenAI is looking at this and saying, if we have to go up next to that guy, I'm not sure that we are going to get quite the demand that we want, and so we're pulling this thing. Because, again, I'm only concluding that based on, there's two reasons that I can dream up that you wouldn't want to go public. One would be you don't think the market conditions are good for it. I see nothing about market conditions that would say, hey, it's not going to be a good market for an IPO right now in one of the leading AI spaces. Two would be there's something about my business that I don't want to disclose.
Why are they just figuring that out now, though?
Don't know. Yeah, I don't know what's changed. The only thing that I can think of that changed is that they are realizing that their main competitor is in better financial shape than them. That part could have been
They knew that, right?
I don't know. Huh. Did they? Like, did anybody know the type of financial
I'm in question mode. I have no answers today.
I don't either. I'm not entirely certain that OpenAI was aware of Anthropic's financial position. I'm not aware of Anthropic's financial position right now. And if they now suspect, hey, we're in significantly worse financial shape than our direct competitor, and everybody's about to learn the details of that via an IPO filing, that could be a reasoning.
Doesn't SpaceX prove that? Unless it's different than expectations. I think you did just say this. We all think X, it's actually 0.5 of X.
Yeah.
So that would be a dramatic disappointment relative to expectations. Otherwise...
You're right, though, because SpaceX, if there's one lesson from that, it's that you can go public, you can lose all the money you want, and people will still buy your shares.
Yeah.
Right?
So it's got to be really bad, then.
Granted, there's some extra rope that investors seem to give Elon Musk for any of his companies, so maybe that's unique to him, but... Yeah, I guess I'm right there with you. If there's one lesson from the SpaceX IPO, it is not that investors are unwilling to buy high growth,
no, who cares?
Pie in the sky type companies. You can lose as much money you want, and as long as you've got a cool business idea, people are going to gobble up these shares. So, the idea of an OpenAI delay on the IPO strikes me as unique to OpenAI and not the market moment that we are sitting in. Let's take a quick break. When we come back, a little bit of oil talk as there was some action in the Strait of Hormuz overnight. That's next here on the Financial Exchange.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning isn't just about writing a will. The right trust can help your family avoid probate, protect your home, reduce estate taxes, and even help shield assets from the cost of long-term care. That's why Cushing & Dolan created a new guide called Demystifying the Top 8 Estate Planning Trusts. Inside, you'll learn the difference between revocable and irrevocable trusts, why some trusts are designed to protect assets from a nursing home, and how certain trusts can keep your family's affairs private. The guide also explains some of the biggest mistakes families make, including creating trusts but never properly funding them. If you've been putting off estate planning, this guide is a great place to start. Call Cushing & Dolan today at 866-848-5699 to get your free copy. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange.
Oil markets this morning shrugging off any concern about traffic through the Strait of Hormuz, despite a cargo ship being struck, presumably by the Iranians. I think they took credit for it. The ship was apparently navigating through the strait on a path that the Iranians have indicated they were not going to allow. And they struck the ship with a drone and have continued to allow traffic flow through their designated route that they have said they're allowing, which oil markets are moving down on the news, right? We've got oil prices off nearly 4%, which I do take as good news, but I think is just a pretty stark reminder right now of who exactly is in control of the Strait of Hormuz.
Yeah, it's a new reality, and oil will be, on average, a little bit more expensive than it was previously until we find a way, or Arab exporters, oil exporters, find a way around the strait.
Yeah. Again, we will see. Obviously, everything's still in negotiation in terms of where this goes, who controls it, whether or not the Iranians are able to charge tolls. But for the moment, I mean, the message right here is, hey, if you don't follow what the Iranians do, then we're going to stop the traffic, as we have seen them pretty successfully exercise that power here. So I applaud energy prices coming down. I'm glad that is the case. I did not want to see $6 a gallon gas. But the trade-off seems to be, hey, yeah, gas prices and oil prices coming down in exchange for the Iranians now having a much larger degree of control over traffic over the strait.
Now, what would break the status quo at this point? We resumed military action.
Yeah,
we went in
earnest.
earnest.
Them, I guess.
But
yeah.
the president has already ruled that out. He said stock market's really important to me. Gas prices are important. If we continue the war, it'll be disastrous. I'm paraphrasing, but barely.
Yeah.
So Iran now knows we don't have the stomach for conflict. I personally don't, so that's fair.
Yep.
What incentive do they have to revert to pre-war behavior?
Yeah. To your point, like you said, every country in that area now is trying to build infrastructure to circumvent the Strait of Hormuz, and that may be the economic push that you see. But for the time being, it appears that...
Here's a headline, Mike.
Yeah, go ahead.
Oman warned European allies, according to Bloomberg, ship fees likely needed for Hormuz.
What do you take that to mean?
Well, it was debatable. It was unclear whether Oman would support. Oman's on the other side of the strait, right?
Yep.
Okay, I'm not an expert, but I've seen the maps in newspapers lately, as we all have. If they come on board for tolling, it's effectively a toll. They can call it insurance, a fee,
whatever they want to call it.
They can call it a donation. They're charging. If they're on board for that.
I really do hope they call it a donation.
Yeah, a gift.
We would like you to, in order to navigate the strait, we just need a charitable donation to our nation's military and nuclear
Bitcoin
weapons
and
program.
Amazon.
They just turn a giant iPad around and how much do you want to tip? 15, 20, 25?
Toast is making a killing right now on their
Yeah, I mean, Mike, this is why you don't go to war with Iran. No offense to anybody who loves everything the president does. This is why you don't go in there in the first place, because you open up this Pandora's box of ongoing phony negotiations, little retaliatory tit for tat, and so forth. There's screwballs over there. They got us on the hook now. They're not going to let us off. They've got the whole world dancing to their tune.
We will see. Again, we are very early on in negotiations, and who knows precisely where this goes. But again, I think
it goes nowhere. They're going to draw it out for decades if they can. Iran loves the attention.
Right. I think the key message right now is there's very little doubt as of today who is in control of the Strait of Hormuz, and it does not appear to be the United States.
A trust can do a lot more than simply pass access to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top 8 Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Well, here in Massachusetts, there's been a number of ballot initiatives that have been tossed out and included in the vote in November, and rent control was one of those items that was supposed to, or most people thought were going to make it onto the ballot, and has now been tossed over a ruling by the Supreme Judicial Court on the wording there from some religious exemptions that were on the ballot initiative. I'm honestly a little bit disappointed that we won't be having that healthy debate about rent control and how it would be, in my opinion, bad for the state, but it won't be on the ballot. Instead, one of the ones that did make it on there is a vote over the legalization of marijuana in Massachusetts, which occurred a number of years ago, and a group pushing to reverse that legalization in a meaningful way. And I'd like to take some predictions about how dramatically this vote is going to fail to repeal it specifically. My prediction would be at least 70% of votes to maintain the legalization of cannabis in Massachusetts, Tucker. So you can write that down as
70?
a prediction. 70% minimum is where we're going to land. Marc, do you have any guesses?
What are the arguments for repeal? The social costs have been higher than expected. Like, are we seeing increased rates of hospitalization? There was a great quote I wanted to bring up. Let me see here. It was a moral. Okay, so now we're back to the progressive era temperance people making arguments that it's making husbands behave in a naughty way or something.
Kevin Sabet, president of Smart Approaches to Marijuana, a prominent Virginia-based anti-weed group, was quoted saying, "I don't think people voted for a pot shop on every corner, smelling weed everywhere they go, and having to protect their kids." I'm just going to throw this
pot everywhere. What are you talking about, dude?
Precisely. I'm just going to throw this out there. As a 10-year-old, I attended a professional hockey game for the Bruins, and on that evening, I had most of a full beer spilled on me and went to the bathroom and saw a guy throwing up in the toilet from drinking too much. So I don't know where we think we have this moral high ground over cannabis when we do absolutely nothing to protect children against the visibility of alcohol consumption. Like, I just don't see the difference.
I mean,
between
you got to
these
show
two.
people it's hitting them in the wallet. If it was costing more to provide public safety for these stores, if there were more crime that could be solidly attributed, which is impossible statistically, but suppose you could. I mean, you got to show me this is costing us more than the freedom to do what you want is worth. And even then, it would be a tough argument, right? I mean, it's not. To mimic the arguments of the progressives of 120 years ago, is not compelling today.
Yeah.
Like, I don't care what you find offensive. If I'm minding my own business, back off.
Yeah. So again, we'll see where this goes. My prediction would be that, legalized cannabis in Massachusetts stays legalized, but that will apparently be on the ballot initiative this November, and you can get out there and vote on it.
If you're not too stoned to find your way to the polling place.
Pothead.
Yeah.
Quick break. We're going to go to Taco Bell, and we'll be right back.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We've got a guide available this month on required minimum distributions. And, Mike, I want to talk about common mistakes that we see. Sure. Let's start first. People not understanding the difference between inherited and non-inherited IRAs.
Yeah, so if you've ever inherited an account that is retirement in nature, you've dealt with these complicated rules. And to make it more complicated, the rules have changed over the last several years. But suffice to say, unless you meet some very specific scenarios, in most cases, if you inherited an account from a non-spouse, then you're going to have 10 years to empty that account, pay any of the taxes that are due on it, and move along. But in addition, there are annual required minimum distributions, and it is very complicated.
What about a situation where someone tries to delay taking their RMD? What kind of problems can you run into there?
Well, one, if you delay your first year RMD, then you're going to have to take 2 in the same year, and that can really add to the tax burden. But more generally, if you just wait to deal with your future RMDs until you're 73 or 75 years old, you just have fewer options. It's going to bump up your income. You may end up paying higher taxes. You may end up paying higher Medicare premiums. Your Social Security could become more taxable. So it pays to plan early when it comes to RMDs.
Our guide this month is titled Understanding RMDs, and there are 2 different ways you can request it. The first, you can go to armstrongadvisory.com and request it there. The second, call 800-393-4001. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Congrats on making it to Friday here from the Financial Exchange. It's a fairly calm day on markets, which I'll take. This week has been a fair bit of downward pressure. The NASDAQ composite for the week right now off nearly 4.5%, but only 0.1% this morning. S&P and Dow both basically flat as we kick off the 11 o'clock hour here. But big moves in oil prices. You've got West Texas crude below $70 a barrel, sitting at $69.15. That's a nearly 4% drop this morning. Yield in the 10-year Treasury sitting at 4 1/3, about 4.374%, little changed. In terms of the national average for a gallon of gas, we're now sitting at $3.90. A little bit more here in New England. Massachusetts about $3.97. Maine around $3.94. Vermont over $4 a gallon. And then taking a look over at mortgage rates, because it's been a little while since I've updated there. We're sitting, according to Mortgage News Daily, at 6.53% on the 30-year fixed-rate mortgage, which is down from the highs that we reached during the war in Iran. We reached 6 3/4 back in May, so we've moved down from there, but still well above where we were prior to the outbreak of war, which was sub 6% on the 30-year fixed. Anything else catching your eyes this week, Marc? Markets, economic news, or otherwise?
Well, yeah.
Put you on the spot.
There's a lot. No, it's a fair question. Were there any big surprises in terms of market movements?
I didn't see any
this week. Treasury yields longer. Go ahead. Sorry.
I was gonna say PC inflation was as expected.
Yeah, it's
bad.
Bad.
As expected, bad.
So, and the interesting thing is Treasury yields came down a bit. They're still elevated relative to pre-war. But they're not astronomically elevated. Mm-hmm. Yield on the 10-year Treasury, I don't know what it's doing today, but was at about 4.4.
Yep.
Yesterday. And it's come in, again, 10 or so-called basis points, 1/100th of a percentage point, or just 0.1 percentage points, maybe an easier way to put it.
I mean, it's followed oil prices pretty closely.
Yeah, so I guess that's explicable. So you could argue that it's always dangerous to draw this conclusion. Well, markets seem to think, because it could just be random. It could be noise. But let's take it at face value that this reflects the average investor's opinion or something. Inflation's not going to become entrenched, if was maybe the message of longer-term Treasury yields this week. Shorter term, not as much movement. So the conviction seems to be, if you want to attribute to markets the opinion of the average investor, that the Fed's got to do something this year, as we've been talking about, probably raise rates a little bit, because by not raising rates when inflation expectations are going up, real Fed funds rate, which is what matters for economic activity, is coming down. So policy's gotten more accommodative over the past couple of months, despite the Fed not doing anything. But over the long term, markets don't seem to. They think Warsh specifically, and I know we're going to talk about this next, is going to get a handle on this. Maybe that's the best way to put it.
Speaking of rates, we have the Fed Watch tool from CME Group that allows you to look at implied probabilities of where rates go based on betting out there. And for the July meeting, which is scheduled for end of July, July 29th, it's expected about a 70% chance of no move then. Following that, we've got a September meeting, and by then it is anticipated that rates will be at least 0.25% higher than where they are right now. Let's talk about Warsh. We're more than a week out from his first ever press conference as chair of the Federal Reserve. With a week to reflect back on it, what's been your impression? What do you think markets' impressions have been of Warsh's first ever Fed meeting?
My personal impression was positive. I like him a lot, despite the fact that he's going to have trouble changing the models that Fed economists use, because he's not an economist. He's a lawyer. Powell was a lawyer.
Yep.
Again, irks me that they can't find a PhD economist to fill this role. I mean, you wouldn't make a lawyer Surgeon General. You wouldn't make an economist head of the Chief Justice of the Supreme Court. But for some reason, we like appointing lawyers as head of the Federal Reserve, despite the very technical nature of monetary policy. So he's got a handicap as a result.
Yep.
Despite that, what matters most, I think, and researchers, he is not one, but he seems to get this instinctively, is credibility. Which means you're going to do what you say you're going to do. You don't have to specify your so-called reaction function, a phrase that comes out of research that news people like to use. It just means rule. People were upset, some commentators, that he wouldn't share his rule for interest rates. You're going to raise them 1 for 1 with inflation. Are you going to wait to see the whites of inflation's eyes? What's your reaction function? What's your rule? He wouldn't say. I kind of like that. You can almost become captive to a rule you articulate, because then when you deviate from it, you lose credibility. Mm-hmm. I think Warsh, he didn't say this. I wish he had, actually. When you articulate a so-called reaction function, a rule, you're going to have to deviate from it. It's unavoidable. No rule can cover every scenario. Then you lose credibility. Powell was trapped by his own forward guidance and his own so-called mental reaction function in 2022. Didn't act quickly enough. I don't think Warsh is going to make that same mistake. And he's laser focused on price stability. He used the phrase multiple times. He gets that in the way that really good, effective, like Paul Volcker and to an extent Greenspan, great men, by the way. He gets why they were great, I think, and I don't think he wants to go down in history in the failure column of Fed chairman.
I would think not. I don't think that's.
I know nobody sets out, but he says, okay. Boy, is this guy determined.
But
to
in the
screw
worst
up.
case
No,
scenarios,
right.
I'm with you. I don't think anyone sets out to be a failure when it comes to their chairmanship of the Federal Reserve. But in the worst case predictions, people were calling him a lackey of the president, and
I was,
just going to
because
do
I didn't
what
know.
He was going to say.
God knows what he said to get this job.
Sure,
but I think if he sticks to his guns and he sticks to his philosophical predisposition. And he's a hard money, what they used to call a hard money guy. He puts inflation. Now, the Fed has a dual mandate. They're supposed to achieve unemployment as low as is consistent with price stability, but he never talked about the unemployment side of the mandate, which I kind of liked because it's not a problem right now. Right. Powell would have been as much as I admire Powell standing up to the president defending Fed independence, he was always wishy-washy when it came to that. I got the strong impression that Warsh will keep, that for Warsh, keeping inflation under wraps is paramount, and he will inflict pain on the economy if he has to.
Yeah, and I think it would be very refreshing to not have to hear every 30 days from every Federal Reserve president about their views on where they think it's going to go next.
This is part of the
that would be nice. That would be nice to take a little bit
but
of a
you know,
break
and
from
the
that.
thing is, you can become captive to those. The reason you can become captive to things you've said if you're obsessed with this notion of forward guidance, which only applies, by the way, in the literature and theory under very specific circumstances. It's like a drug you don't want to use much. The Fed became addicted to using it all the time, so they went way beyond the bounds of theoretical work and empirical work on forward guidance. I think it's good that Warsh is, for now, retiring the concept. If we hit the zero lower bound again, meaning interest rates can't go any lower in real terms, you may have to utilize forward guidance to get people to spend if you convince them that rates will remain low, thus the forward part of forward guidance indefinitely. But you can also become a prisoner to that. You become trapped by it. Powell did, and Warsh knows it, I think.
This was known at the time that he gave his press conference, but what we are dealing with right now is a pretty persistent level of inflation. And you know, Warsh knew that when he gave his press conference. He didn't know precisely what the PCE numbers were because they weren't released yet, but he had a grasp on that. I mentioned at the beginning that the inflation numbers we got on Wednesday, is it Wednesday? Wednesday,
PCE
I believe.
was yesterday.
It was yesterday?
Yesterday,
okay. We're right in line with expectations, but those expectations were pretty bad, right? Like, we are seeing now, you know, not only the worst headline inflation that we've seen since 2023, but my concern more that we are seeing pretty persistent inflation even when you strip out the biggest stuff that people are talking about, which is food prices and gas prices. And I'm not sure how you get that core function, you know, core pricing down when all we seem to be talking about, you know, when what we're talking about from the stock market is a bunch of companies who are willing to spend as much money as possible to develop a new technology.
Yeah, so the question is always, is that a change in relative prices? Is it just memory chips relative to hamburgers that are going up, or is the general price level rising?
Right.
In the short term, memory chips going up because people don't immediately retrench will push up inflation. That should not get picked up by measures of of the trend in inflation. Core, ex food and energy, is one measure, imperfect. Warsh understands this. I feel weird not saying anything negative about a personality we talk about on this show, but so far,
Marc's got a crush. Man crush.
I saw him at the press conference, and I'm like, I wish he would explain a little better why he believes what he believes, but you could tell he believes it in his heart, and I think that's important for a central banker. This guy hates inflation. I think it was palpable, at least to me.
Let's take a quick break here. When we come back, we're playing a little bit of trivia next on the Financial Exchange.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. Estate planning isn't just about writing a will. The right trust can help your family avoid probate, protect your home, reduce estate taxes, and even help shield assets from the cost of long-term care. That's why Cushing & Dolan created a new guide called Demystifying the Top 8 Estate Planning Trusts. Inside, you'll learn the difference between revocable and irrevocable trusts, why some trusts are designed to protect assets from a nursing home, and how certain trusts can keep your family's affairs private. The guide also explains some of the biggest mistakes families make, including creating trusts but never properly funding them. If you've been putting off estate planning, this guide is a great place to start. Call Cushing & Dolan today at 866-848-5699 to get your free copy. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and despite the loss last night, the U.S. men's national team is advancing to the knockout rounds of the World Cup. They will take on Bosnia and Herzegovina on Wednesday at 8 o'clock. So our trivia question today is, what year did Bosnia and Herzegovina break away from Yugoslavia? Once again, what year did Bosnia and Herzegovina break away from Yugoslavia? Be the third person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Tucker, I love these stories that you pull from Axios.
Do you?
Nothing's ever been so obvious to me that it's purely written by AI. Every story that they publish, at least the ones that you put in the stack, because I don't read Axios otherwise, they're all structured and formatted the exact same way. They have a bunch of bold headers.
I don't think that's AI.
3 bullet points.
That's not AI. That's just how they structure it. I mean, they have authors.
Yeah, that's called.
I know they have authors. Okay, we can not imply that they're just utilizing AI to write their own
now,
stuff.
what those authors do, I don't know.
Yeah, but they are also brutally obvious that I just don't know who they're designed for. So, Marc, Do you know anybody that is unsure of why U.S. corporate profits right now are like? I don't even know anybody that doesn't pay attention to markets that doesn't know why U.S. markets corporate profits are surging right now.
You raise a good point. Their audience may not be readers of Market Watch, Wall Street Journal, and stuff like that. So don't forget these. They do have to consider who their audience is and what their other news sources might be. So to some Axios readers, this could be news. Mike,
could it? Is there anyone that doesn't know that AI is driving everything in this economy right now?
Nobody that listens to this show doesn't know that.
I know I live in a little corner of the universe where all I read is market and economic news, and that makes me strange. But this seems like pretty big news to me. I feel as though everyone in the world, like, even if you don't own any stocks or an investment portfolio at all, you're out there complaining about how AI is taking all the jobs. Of course, U.S. corporate profits are being pushed upwards by AI spend. So I just find it a little bit humorous. But is there anything intelligent that we can say about this moment in time? Because I didn't find anything in this article to be terribly insightful or insinuating of what could come next. Yes, there is likely to be $1 trillion spent on AI build-out this next year. JP Morgan is now expecting that AI CapEx will grow to $5.5 trillion between now and 2030, a massive amount of money, hence all the corporate profits, because where is that money going? It's going towards companies to build out AI. But is there... I think the interesting... I'll make one point about corporate profits that we brought up over the course of the last several months, which is when you are looking at corporate profits on a quarterly basis and digesting this news right now, I'm not going to call them artificially inflated. They're not artificially inflated. This is how you account for profits. But remember what we are seeing right now, which is major companies making huge purchases of new assets that they are putting on their balance sheet. Like, that is what's driving the profits.
Maybe one way to think about it is you own a deli, a restaurant or something, and there's a big construction project suddenly next door. It's going to take 2 years. They're putting in a big apartment complex. A situation a lot of us can relate to in Massachusetts, where we're broadcasting from. A lot of multifamily housing going up.
Sure.
You would not, if you were that business where all the guys and women who's ever on the job site come in for lunch every day, your revenues double, triple, maybe for a long period of time. If you were doing a forecast, which you might not if you're just a small business person, or you might, you wouldn't project that growth rate indefinitely. Agreed. Similarly, Micron and others are almost certainly not projecting growth rates or even levels. There's a difference there. Like they've experienced lately indefinitely. Said differently, this thing's going to sunset. It's probably because a recession hits. Investment always plummets during a recession. It generally drags GDP down despite its relatively modest size compared to, say, consumer spending. That's going to happen, Mike. That's what killed the internet boom.
Yep. Didn't kill the internet, just killed a bunch of the company's profits that generated.
I'm talking about, big difference, right?
The other piece to this, from an accounting perspective, I just like to bring this up to further the conversation about this deli that is receiving a boom in their profits from all the construction workers across the street. When that deli goes and buys a new slicer from the manufacturer, that slicer books the revenue right away, and their corporate profit goes through a boom because they are booking that revenue immediately. The deli does not book an expense right away. They have bought a piece of equipment that they are then going to depreciate on their balance sheet for, I don't know how long a deli slicer depreciates on a corporate P&L. But that has been brought up as well, is what may not be getting appreciated by some investors right now is that every company looks pretty attractive at the moment, because if you're selling stuff to the AI industry, your profits are getting a huge boost. And if you're buying stuff from the AI industry, you're not booking it all as a realized expense today. You are paying for it and then booking the expense as the asset depreciates and moves towards the end of its life over the course of the next 5 to 7 years. And that is known by people that, that analyze companies, but it is important to call out, and I think has been brought up as maybe an area that's underappreciated by some, is how much depreciation is going to slam into some of these very profitable companies over the course of the next 5 years. I'll leave it right there. We've got to take a quick break. When we come back, Tucker's going to have a full market recap for you. And then later on in the program at 11:45, Paul LaMonica from Barron's joining us to talk about a new entrant into the U.S. stock market, what it might mean for that company and U.S. markets. Wall Street Watch is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts, and this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are relatively quiet, but are now edging higher with the S&P 500 and NASDAQ on pace for a losing week. Right now, the Dow is up 0.25%, S&P 500 up 15 points, NASDAQ up about 0.1%, Russell 2000 is down modestly, only 0.2%. 10-year Treasury yield is down 2 basis points at 4.37%, and oil down over 4.5% now, trading at $68. According to the New York Times, OpenAI is leaning toward holding off its IPO until next year. The AI company's advisors are pushing its chief executive Sam Altman to move slowly after SpaceX stock has been volatile and as the startup grapples with financial challenges. Meanwhile, after its 16% surge yesterday on the heels of its blockbuster earnings, Micron down over 4% today. Other memory stocks, including SanDisk and Western Digital, pulling back as well. Elsewhere, ON Semiconductor announced an all-stock deal to acquire Synaptics in a $7 billion deal, and after sinking 6% yesterday, after announced price increases to its Macs and iPads, Apple shares are up over 1% today. I'm Tucker Silva, and that is Wall Street Watch. In the previous segment, we asked you the trivia question: what year did Bosnia and Herzegovina break away from Yugoslavia? It would be 1992. And John from New Bedford, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to John. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Marc, the Social Security faces trust fund depletion. This is your daily reminder that the Social Security Trust Fund is due to go belly up by fourth quarter of 2032. The trust fund pays only a portion of Social Security benefits. That's one item that I think gets misrepresented or misinterpreted sometimes. That does not mean that Social Security funding stops in 2032. It means that the trust fund, which subsidizes payments to beneficiaries, will not have enough money to pay out. Therefore, it's estimated that about 78% of current benefits would be payable to retirees and the disabled at that point in time. And, CNBC is saying that some lawmakers are calling for taxing high earners in order to fix it, which would fix some portion of the problem, or I guess it depends how much you're willing to tax those high income earners in order to fix the problem. You could probably fix the whole thing if you taxed them enough. But here we are now 6 years away, and I see no fundamental change in the seriousness of lawmakers in dealing with the
No, they're not even
it's
not like there's even a debate in Washington about it.
You would think that given that we are, in election season, right? We are in midterm election season. We will hear debates this fall. You would think that would be a pretty key area to focus on, given that lawmakers are, well, if they were responsible, would start dealing with it pretty soon. And I gotta be honest, I don't hear anything about
no, there's no leadership on the issue. There's no
to
leadership on relatedly, there's no leadership on the debt.
When was the last time you can actually point to U.S. lawmakers raising tax rates? I guess Obama.
Obama raised marginal rates a itty bit.
To pay for a massive increase in spending. So I don't know if it even covered the whole. It probably didn't cover the whole thing. But I guess Obama was the last person that you could actually point to as raising taxes. When was the last time you can point to a sitting president that actually lowered the deficit? Was that Clinton?
Deficit was coming down, if that's what you're.
Yeah, I know he didn't cause the deficit to come down.
No,
but the deficit
was coming down under Obama.
Did it?
The economy was growing. They raised taxes. Okay. Oh, sure. Yeah, we had a $600 or $500 billion deficit in 2016 that Obama handed over to Trump.
Okay.
Republicans passed a big tax bill, didn't offset it with spending cuts, as they never do. I voted for him, so I guess at fault myself. But anyway, and as a result, the deficit doubled before COVID, and then, of course, increased, 3 or 4-fold during COVID, and we are where we are today. From $2 trillion in 2000, and as you point out, Clinton ran surpluses a couple of years ago. Give Gingrich and his successors in the speaker chair credit too. And so we were at $2 trillion. Now we're at 30+ trillion.
The history for the last really 15 years has been defined primarily by benefit increases and tax cuts. That's been the reality of what we have seen over the last 15 years.
With a couple little interruptions that didn't make a dent.
Yeah.
Exceptions, I should say.
Dealing with this is going to be extraordinarily challenging for that reason.
I don't think so. We'll inflate a lot of it away. 4 or 5% inflation coupled with spending restraint. I think once there will be tremendous as political power shifts from older folks to younger folks, I think it'll be easier. Don't you?
I don't know.
I mean, the big impediment right now is old, and I'm sort of straddling at 54 years old. I'm sort of straddling older and younger. I don't want to see my benefits cut, but if you told me my normal retirement age was going to be raised from 67 to 70, I say this now. Ask me in 14 years, I might be very upset.
I don't think any one of the solutions that I've heard is the perfect one, but what I fear most about this is that instead of actually dealing with the issue, lawmakers wait until the last second and then change the law.
Well, of course, we're going to do that.
We're going to wait to the last second, but instead of actually changing the fundamentals of how the program works in order to fund it properly, I fear that we will instead just change the law in terms of how the trust fund is funded and just print the money to do so. That's my biggest fear, is that we just continue to go on that path. And to me, it just seems like the most likely scenario.
I've not heard any. It's well known how to fix it. It's going to have to be a combination of benefit adjustments. You could call them cuts if you want, even though we're not cutting anybody's check. Cutting checks for anybody who's getting one today, reducing benefits for people who are in benefit in that phase. It's going to have to be a combination of those two things. Increasing the normal retirement age could be thought of as a benefit cut.
Yep. I do hope so. The planning piece of all of this is important, especially maybe not so much for those that are in their mid-60s, because my personal belief is that we won't see benefit cuts for people that are that close to receiving Social Security. But if you are within a decade of becoming eligible and you are mapping out your finances, for most Americans, Social Security is a pretty big piece, a pretty big component of all of that. And unfortunately, the program is a lot less certain than it was just 5 years ago. If you're staring that down, if you're worried that your retirement is going to coincide with this 2032 deadline or be close to it, I'd urge you to call the folks at Armstrong and book some time to review your plans for how you are going to approach Social Security and Medicare, and how a change to the program could impact your retirement. If you want to book some time for us to give you a ring and talk through it, you can go to armstrongadvisory.com, a free consultation available right there. You can also call us at 800-393-4001. But this is the type of stuff we work with our clients on every day. armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As Tucker mentioned earlier, all three major indices have turned positive for the day as we close in on the noon hour. We've got the Dow, S&P, and NASDAQ all up approximately 1/3%. We're going to take a quick break here, and when we come back, Paul LaMonica from Barron's joins us next.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Hi, this is Chuck from the Armstrong Advisory Group. Our new guide, Understanding RMDs, explains why required minimum distributions are about more than just withdrawing money from a retirement account. The rules can get complicated fast. An inherited IRA opens up an entirely new set of deadlines with rules to follow, and mistakes can be costly. The IRS can impose a penalty of up to 25% of the amount that should have been distributed. But there also may be opportunities to plan ahead. The guide covers strategies like qualified charitable distributions, reinvesting RMDs, and ways to help manage future tax exposure. To request your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
Joining us now is Paul LaMonica from Barron's, talking to us about Korean stocks and SK Hynix in particular. Paul, thanks for joining us. Appreciate it.
Thank you very much.
So tech shares generally have been under pressure this week. The NASDAQ, as of this morning, was off around 4.5%. And the Korean Kospi index down about 6% for the week now. Talk to us about SK Hynix, not precisely a household name here in the U.S., but going to be going through a U.S. listing, making their shares more available to U.S. investors. Why generally it seems obvious to me, but why generally do companies want to get access to listing shares on a U.S. market when it is, fairly easy these days to go buy a South Korean index fund or something like that?
Yeah, no, exactly. SK Hynix, along with Samsung and Micron, which reported great earnings earlier this week, dominate the memory chip market. I think SK Hynix is looking to raise some capital with this listing in the U.S. to help them compete even more effectively against Micron and Samsung. So, and it raises its profile in the U.S. As you point out, it's not exactly a household name, in the way that, Micron is now starting to become one, is almost like the new NVIDIA, if you will. And then Samsung, even if people don't know it as a chip giant, they know it for, phones and other consumer electronics. So what's really fascinating is that, as you point out, there are ETFs where you can get exposure to these South Korean listed shares. There's, EWY, which is the prominent South Korea ETF. There's the DRAM ETF, a wildly successful debut, that just launched a few months ago, a memory ETF that, is dominated by Micron, Samsung, and SK Hynix. So U.S. investors have had their opportunities to buy this stock through funds, but now it's going to be a lot easier to just buy that individually with these American listed shares.
We sometimes bemoan the concentration risk of the U.S. equity market. The S&P 500, the top 10 companies representing more than they ever have, and I do view that as a potential risk out there. Then you go take a look at some of these other country indices, and you start feeling a little bit better about the S&P, right? The Kospi index, I believe Samsung and SK Hynix represent about 50% of the total index, if not a little bit more. What is that, with that type of concentration in the index and therefore in the funds that track the index, are investors expecting some degree of downturn for these funds if suddenly I can just go buy the ADR here on U.S. listed exchanges at no trading cost on most platforms?
Yeah, that is a possible risk for these particular ETFs that have exposure to the South Korea listed shares. The fact that you will be able to buy SK Hynix in the U.S. More readily, could lead to decreased demand for some of those South Korean ETFs. But at the same time, remember, Samsung still doesn't really have an easy way for U.S. investors to access it, and there isn't any plan as of yet for the company to list in the U.S. the way that SK Hynix is. That might change, especially if the SK Hynix debut is pretty successful. I think investors, though, by and large, they're going to gravitate to where the growth is. And when you look at ETFs like EWY and DRAM, they're not going to maybe abandon them just because you can buy SK Hynix directly as a U.S. listed stock. But I think you're right. Concentration is not just the U.S. risk. It's a South Korea risk. It's a Taiwan risk with Taiwan Semi. There are many geographies right now that are beholden to the AI trade.
Paul, there's many people writing this week about the bruising week for tech shares, and I think trying to attribute some cause to it. I heard concern about Micron's earnings leading into the week, which then blew it out of the water. You had Apple's announcement about higher prices on their components and hardware that they sell, bad inflation. Do you attribute anything to this seeming shift in sentiment this week, or is it something that we're going to look back on as kind of a blip in the radar and put it behind us?
It could be the latter. Every time we have these dips, they proverbially get bought eventually. Yep. So I think we also have to keep in mind that news flow is a little bit lighter. We do have the Micron earnings this week, but earnings season is pretty much wound down, and it'll get started up again mid-July when companies start reporting their second quarter results. But again, at the end of the day, you can't appreciate the fact that you look at the SOX, the iShares Semiconductor ETF, it is nearly doubled this year. It is reasonable and healthy for some people to take some money off of the table. That doesn't mean that, the end times are nigh for chip stocks and tech stocks and the AI trade. But, investors have to be more rational and cognizant of valuations.
There you have it. Paul will let us know when the sky is falling and our pets' heads are falling off. Appreciate it, Paul. Have a great weekend, and we will talk to you next week.
Don't ring a bell at the top, and I don't either.
Have a great weekend. Thanks, Paul. That's Paul and Monica from Barron's. Join us today to talk about SK Hynix and their pending U.S. listing. Marc, anything that you wanted to jump into?
Now, there's a piece in the Wall Street Journal about China sharpening its tools. Its tools for hitting back at foreign sanctions. Here's the summary. China's preparing a new bill. So they do have a sort of a parliamentary process. It's a rubber stamp thing. But anyway, they do have lawmakers, apparently. This new law, if passed, and of course it will, if
the Wall Street Journal is reporting it, then it's going to pass.
It's probably a foregone conclusion at this point. State prosecutors will be able to file civil suits against foreign entities for allegedly damaging China's interest. Very, very vaguely defined. It would add to legal mechanisms countering foreign sanctions and coercion, and the American Chamber of Commerce in China stating its members will closely watch the law's implementation. This is just another tool in the economic warfare toolkit. We're in an age of economic warfare. It's a remarkable turnaround from the age of liberalization and globalization that prevailed until, I don't know what, say the financial crisis, when it was obvious that the trend in GDP had changed and that living standard growth rates weren't going to resume their heady pace of the 80s and 90s. So no matter who the president is here, who the president is in China, probably for the rest of our lives, the world will get smaller, more fragmented, and characterized by sort of tit-for-tat stuff like this.
I would expect so. Yeah. Bloomberg, Chiron just flashing here that President Trump calls the Iranian strike on that cargo vessel a violation of the ceasefire. We will see if there's much to do about that, and if markets move at all on it. Taking a look here, oil price is not moving an inch on it. Oil price is still down about 4% on the day, below right around $69 a barrel as we head towards the top of the hour here. Taking a look around at markets, as I mentioned, there's been a reversal in market action from the early start of the day. We've now got the Dow Jones Industrial Average up 128 points, 0.25%. The S&P 500 up 18, also 0.25%. And the NASDAQ up 41 points, about 0.1% here. Taking a look, like I said, at oil markets, which are down today. Bond market, we're seeing the yield on the 10-year Treasury at 4.378%. And if you want to go get a new mortgage here, you're still looking at rates in the 6.5% to 6 2/3% range, continuing to put pressure on anybody looking for that new home. It's all the time we have for this week. Have a great weekend. We'll be back at it next week for a shortened trading week ahead of the 250th July 4th holiday. Thanks, everybody, and have a great weekend.